Welcome back. As promised, let's straight away head across to Manisha for the commodity cues of the morning. Manisha, what's the headline you're tracking?
Well, I'm looking at the agriculture commodities. This has been a year when we haven't really bothered about agriculture as an inflation. That is because not just in India, but globally as well, we are looking at higher agriculture produce coming in. So a couple of commodities which actually have seen higher prices, but apart of that, everything else that comes under agriculture has seen a decline in sense of prices. I'll start with soybeans because you've seen prices gain up here, trading at near 16-month highs. And that is because the US weekly sales to China are at the highest since November 2023 there. But what the markets are looking at right now is that one, China already has high inventories. The crushing margins have been on the lower side, and the US soybean is not competitive when compared to Brazil soybean. So how much will China buy from US is a bit of a question mark, and that is where the rally is getting stalled right now. The other one is cotton. Hasn't had a great year, this one, but at this point in time is trading at a one-week highs, and that also because the US weekly export sales have doubled on a week-on-week basis, and markets now seem to be believing and giving an 80% probability of a US December rate cut by 25 basis points, and that clearly has been supportive for various asset classes, including agriculture, industrial commodities as well. What is not doing well into the markets is rubber, trading at a two-week low. The Chinese demand has been on the weaker side, and the European Union is right now delaying the deforestation regulations and perhaps revising it as well, and that is what has led to decline in prices. Palm is another one, trading at a 6-month lows right now. It's to do with the ringgit as a currency as well. But apart from that, the major producer of palm, which is Malaysia, is looking at the October output at the highest in last 10 years. And when you look at their inventories, they are the highest in 6.5 years as well. So there is no dearth of palm when it comes to Malaysia. Wheat is another one. India is looking at a very good crop, and so is everybody else in the global markets. So that is the reason you have wheat trading at a one-month lows, and the global inventories and global production are at a record highs. The other one is coffee, trading at a one-month lows yet again. US has removed 40% of tariffs from Brazil, but this has been done for green coffee and not for instant coffee, and that is what is bothering Brazil there. Also, if you look at the overall markets then in this year, you will see that barring a couple of agriculture commodities, everything else seems to be heading for a negative 2025. So as I said, soybean has done quite well, 13% of gains onto that one. Sunflower is up by 10% as well, and that is exactly where the gains stop. It's a 5% decline for rapeseed and 10% down for palm oil as well. That is what edible oil sector looks like. Now, this is what we're looking at in sense of grains and cereals. It's a decline across wheat, corn, and a 27% of decline for rice as well. Take a look at the industrial agriculture commodities, which comprises of rubber and cotton, and you're looking at a 12 to 10% of a decline here as well. And then comes coffee and sugar. So while coffee seems to have done quite well, up 29%, sugar in the international markets is down by 23% in this year.
All right, Manisha, thanks very much for that. So that's commodities in focus.